Let's be real, you're out here buying crypto with one hand and crossing your fingers with the other, hoping the market doesn't eat your lunch before rent is due. If you've ever watched your portfolio drop 40% in a weekend and simultaneously remembered your car payment is Monday, this conversation is for you. Here's the thing nobody tells you when you're deep in the crypto rabbit hole. Volatility isn't just a price problem, it's a cash flow problem. When markets move the way crypto moves, sometimes losing half their value in 72 hours, your liquidity becomes your lifeline, not your returns. Think of your emergency fund as the foundation of a house you haven't built yet. Without it, every gust of market wind threatens to blow the whole thing down, no matter how beautiful your investment thesis looks on paper. The general financial rule says 3 to 6 months of living expenses in cash, but for crypto investors, that number needs a serious upgrade. We're talking 6 to 12 months of expenses, sitting somewhere boring, stable, and completely untouched by the chaos you're willingly inviting into your portfolio. Now, before you roll your eyes and say, but cash loses value to inflation, yes, you're right. And also, have you met a margin call? Because that's what happens when you're over-leveraged, under-reserved, and the market decides to have a bad Tuesday for absolutely no reason. Historically, Bitcoin has had drawdowns of 80% or more, 80% from peak to trough, multiple times. Ethereum, altcoins, meme coins, even worse. And the recovery timelines have ranged from months to years. So your emergency fund isn't pessimism, it's math. A lot of people confuse their crypto portfolio with their emergency fund, which is honestly one of the most financially dangerous things you can do. Imagine needing $2,000 for a medical bill and your only liquid asset is a token down 65%. Now you're forced to sell at the worst possible time, locking in a loss you never had to take. The misconception is that holding cash is doing nothing. But in the world of volatile assets, cash is your most powerful strategic weapon. It keeps you from panic selling, it keeps you solvent during downturns, and it gives you the ability to buy more when everyone else is emotionally destroyed and selling at the bottom. Here's the practical framework. Calculate your monthly essential expenses, rent, food, utilities, insurance, minimum debt payments, and multiply that by at least 6, ideally 12, if crypto represents more than 30% of your net worth. Keep that number in a high-yield savings account or money market fund, not in a wallet, not in a stable coin, and absolutely not in another speculative asset. The discipline is the hard part, because when crypto is running hot and everything is up 200%, your emergency fund is going to feel like dead weight. But the investors who survived the 2018 crash, the 2022 collapse, and every brutal correction in between were the ones who never had to sell because they had cash. There's something almost poetic about the fact that the most unsexy financial advice, just keep cash around, is also the most protective thing you can do inside one of the most exciting asset classes ever created. Discipline isn't the enemy of your crypto journey. It's the reason the journey survives long enough to pay off. Size your risk, protect your foundation, and treat your emergency fund like it's already spent, because one day it might be. The investors who win over the long term aren't the ones with the best calls. They're the ones still standing when everyone else had to tap out. So hold your crypto with conviction, but hold your cash with equal conviction, because both are tools and neither one is the enemy. The real risk isn't volatility, it's being unprepared for it. And if you're ready to start building real financial foundations beyond crypto, whether that's real estate investing, contracting work, or finding the right lender to get you there, check out our links in the description below.